Hey everybody, welcome to Seeking Trades. Today I'm going to go over supply and demand. I'm going to talk a little bit about that. Not going into too much detail about it, but just to get you the basics for it. So, supply and demand. You're going to be learning about what that means, imbalances, some balances of trading, and things like that. And then we'll also talk about the trading with the financial institutions. All right, let's get at it. So, supply and demand zones. It's real simple. Your supply is your sellers. That means when a stock goes up and it hits that level or of resistance or whatever that may be, and all of a sudden people start selling, the institutions start selling, that's going to be your supply zones, which I can show you later in another chapter. But right now we're just talking about definitions. Demand's going to be from your buyers. So when a stock comes down to a certain price point that everybody agrees that it's a good deal, they want to buy it, the institutions want to buy it, they buy it. The imbalance is basically supply is more than demand, or demand is more than supply. And that's your basics. So either way, when there's an imbalance, that means the price is going to go up or it's going to go down, whichever imbalance is going to shift that stock or that price at that time. So balance. When you got a balance, you have buyers and sellers that are basically equal. Some people will buy, or traders will buy, and then some will sell, and it just keeps going back and forth and stays in a range or stays in a price. We call that consolidation. So it's consolidating sideways, and they say where the market is going to decide eventually where it's a good price or it's not such a good price, and it breaks to either the upside or the downside, and that's what happens. That's what happens when there's a balance. And just to be straight, you don't want to be getting caught in a consolidation price action. You don't want to trade anything that goes sideways. Okay, big institutions. That's who you want to be trading with. Retail traders don't move the markets. We don't have enough money. There's not enough capital from retail traders. Now, if it's a certain stock like GameStop or anything like that, then yes, the retail traders can attack one stock, but they can't attack markets like the SPY, NASDAQ, things like that, or markets like that where it's going to be big institutions. And there's like 6,500 institutions trading. So there's quite a few out there with big, deep pockets. Hedge funds and just so much competition that you want to be on their side with the banks and with all those institutions if you're going to trade. So the big institutions trade large sums of money, just basically sum that one up. And then when they open up a position, they create an imbalance. So they might not throw a huge order out there, but they throw out many small orders and they accumulate. So when you see a stock come down to a certain level and all of a sudden it's just not breaking because it's just being filled, they're filling their orders because they want it to go up, but they have so many orders they want to fill, and they keep taking every seller. They just keep getting sold into this huge support area. Well, after a little while, the sellers start raising their prices, or they, start getting taken out by these orders because retail traders and everybody, all these other institutions might start getting in there. Well, as that price rises up a few dollars or multiple dollars or whatever it may be, there are still lots of orders that are still in that area. So in that zone. So that zone would be basically a demand zone. So the price goes up and then it comes back down and it retests that that demand zone. And what happens is those orders start getting filled again, and then everybody sees it as support again, and then they make a move. And I will provide examples of this in another chapter. This is just getting you to understand the fact that there's big moves that go up and then they come back down, and then those big institutions are still going to be sitting there with their orders, and they will wait days, weeks, maybe a little bit over a month on those orders to get them filled. And you can play this on pretty much any time frame. I suggest 5-minute time frame or higher. And like I said, I will get into more detail about this later on how it works. So these institutions, they have their orders waiting. I basically went over this. So yeah, I'll show you the charts and things like that later. So this was a short version of supply and demand zones. I'll go into a little bit more detail when I show you the charts and I show you how to draw them. If you want any further information, please check out the book recommendation I add to the bottom of this. It's like I believe it's an $8 book, if that. It might be $12. It's probably the best book that you'll ever buy. I've made thousands of dollars off of it personally, and just trading supply and demand zones. And I'm just here to show you that it works. There's a little more detail to these videos, so stick with me. Subscribe, hit the all button so you know when I post a new video, and leave this one a thumbs up. That'd be great. Next chapter, I'm going to discuss how to find supply and demand zones, and then how to draw them out. And then I might even talk about what candlesticks you're going to be looking for to initiate a trade. Okay. Thank you, everybody, and until next time.